financial reporting standards, what comes to mind is regardless of your business segment, whether you are a small scale entity, or you are a medium enterprise, or you're already a massive corporation, a partnership, or a sole proprietorship at that level, applies the use of PFRS or only applies one certain kind of PFRS in trying to value their assets, deriving their liabilities, acknowledging and valuing their owner's equity with income and expenses. But do they really do that? I say no. And that is what we are going to learn today. Hi, I am Ysmael Fedillaga and I am part of the Astounding Group 5. And we are going to give you this Netflix documentary all about accounting education with the theme that the accounting policies and disciplines plays an integral role in trying to value man's use of our resources. Sit back, relax, and let's get this started.
Alright, good day everyone. For now, allow me to discuss and show you a closer look at the differences of both PFRS, PFRS for SMEs, and PFRS for small entities in terms of assets. First is inventories. In terms of measurement and impairment, PFRS for SMEs, it is initially recognized at cost and subsequently valued at the lower of cost and selling price, less cost to complete and sell. For full PFRS, it is the same as PFRS for SMEs. However, IAS 2 refers to net realizable value. On the other hand, PFRS for SEs are at the lower of cost or market value. Next, initial measurement of basic financial instruments. For full PFRS, financial instruments are measured at FV plus transaction cost. For SMEs, states that it shall be measured at the transaction price including transaction cost. For SEs, an entity shall measure it at the transaction price including the transaction cost unless the arrangement constitutes in effect a financing transaction. For the subsequent measurement, full PFRS, financial instruments classified as held for trading and designated at FVPL are measured at FVPL. For SMEs, at the end of each reporting period, basic debt instruments are measured at amortized cost using the effective interest method. Investment in shares are measured at FVPL if fair value can be measured reliably, otherwise, cost less impairment. For SEs requires that if investment in shares are not traded, it shall be carried at cost less impairment. And if it is traded, lower in cost or fair value shall be used. Investment in associates. Under full PFRS, it shall be accounted for using the equity method, except when investment is held for sale. For SMEs, investment shall be measured using cost model, equity method, or FVPL model. While under PFRS for SEs, its measurement is based on accounting policy election and used either at cost less impairment or the equity method. Investment in property. Under full PFRS 14, management may choose as its accounting policy to carry all of its investment properties at fair value or at cost. In PFRS for SMEs, it is carried at fair value if the fair value can be measured reliably. Otherwise, the cost model is used. And measurement after recognition for SEs, entity shall choose as its accounting policy either the cost model or the fair value model. Next, property, plant, and equipment. Under full PFRS, IAS 16 states that in addition to the cost model, the revaluation model is an option. For SMEs, it is now amended to allow the revaluation of PP. In fact, an entity shall choose either the cost model or revaluation model as an accounting policy, while for SEs requires that it shall choose either the cost model or the fair value model. Next, non-monetary government grants. Under full PFRS, either fair value or nominal amount. For SMEs, it requires measurement using fair value, while for SEs, either no recognition or fair value. Next is borrowing costs. Under full PFRS, borrowing costs that are directly attributable to the acquisition, construction, or production of a qualifying asset shall be capitalized as part of the cost of the asset, and those that are not directly attributable to a qualifying asset shall be expensed when incurred. Under SMEs and SEs, entities shall recognize all borrowing costs as expense when incurred. Next is intangible assets. For full PFRS, either cost model or revaluation model is the option. Measurement after recognition under PFRS for SMEs and SEs requires cost model only. In terms of useful life, full PFRS is either finite or indefinite. Under SMEs and SEs, it is considered to be finite. And if the useful life of an intangible asset cannot be established reliably, it shall be the best estimate of management but not exceeding 10 years. Impairment for asset. Under full PFRS, assets with finite useful life are tested for impairment when there is indication that the asset may be impaired. Under PFRS for SMEs and PFRS for SEs, including goodwill, all are amortized and tested for impairment when there is indication that the asset may be impaired. For biological assets, under full PFRS IAS 41, the standard generally requires this measurement to be at fair value less cost to sell. Under PFRS for SMEs, fair value less cost to sell and cost model if not determinable. While under PFRS for SEs, an entity has an option applying either the current market price model and the cost model.
Now we will determine the comparison of liabilities between full PFRS, PFRS for small medium enterprises, and PFRS for small entities. First, we have the non-financial liabilities that includes provision and contingency. Provision is defined as liability of uncertain timing or amount. The initial measurement was based on the best estimate of the amount required to settle the obligation at the reporting date. Next, contingency shall not recognize as an asset or liabilities. Take note, only disclosure is required. The definition, recognition, measurement, and disclosure of provision and contingency share the same with IAS 37, PFRS for SMEs under Section 21, and Section 16 under PFRS for small entities. Next, we have lease. PFRS for SMEs classify lease as operating or finance lease. Under full PFRS 16, a lessee is required to initially recognize lease liabilities for the obligation to make payments and the right of use of asset for the right to use the underlying asset over the lease term. For PFRS for SE, Section 15 provides a small entity shall apply operating lease model. In terms of measurement, the full PFRS was based on the present value of lease payment to be made over the lease term. PFRS for SMEs measured this based on the fair value or if lower, the present value of the minimum lease payment. Lastly, small entities, all receipt and payment shall be recognized as income and expenses when earned and incurred. Next is the employee benefits. The full PFRS and PFRS for SMEs and PFRS for small entities share the same principles for the recognition of the short-term employee benefits, defined contribution plan, other long-term employee benefits, and termination benefit. And only have a difference in post-employment benefits. Under the full PFRS, actuarial gain or loss are recognized to OCI. For PFRS for SMEs, it is immediately recognized in profit or loss under OCI. The defined benefit plan is not applicable for PFRS for SEs because only defined contribution plan are followed by the small entities. The defined benefit liability is the net total of present value of benefit obligation at year-end minus the fair value of the plan of asset at year-end. Lastly, under the full PFRS of actuarial valuation method is used in measuring the defined benefit plan. Under the PFRS for SMEs, it is only required if the information that is needed to make such calculation is available. Lastly is the income tax. For the current taxes, both the full PFRS and PFRS for SMEs share the same principles. For the deferred taxes under PFRS for SMEs Section 29, deferred tax is provided for all temporary differences and the carry forward of unused tax losses with a few exemptions. So the initial recognition of goodwill and the outside basis of differences from foreign investment that are essentially permanent in duration. So full PFRS is similar to PFRS for SMEs, but there are additional exemptions. For the measurement of deferred taxes, both PFRS for SMEs and PFRS for SEs share similar measurement, which is the tax rates and law that have enacted at the reporting date. While the full PFRS provides that the deferred taxes is measured at the tax rates that are expected to apply to the period when the asset is realized, liability is settled.
Now let's talk about the comparison of full PFRS, PFRS for SMEs, and PFRS for SEs under equity section. This will cover share-based payment, specialized activities, and hyperinflation. Now let's talk about the comparison with full PFRS. The PFRS for SMEs and full PFRS are practically the same with respect to the following: the recording of equity instrument, treasury shares, compound financial instruments, equity swap, dividends, and lastly, other related equity matters. share options which to belongs under share-based transactions, it must be measured at fair value at the date of grant, according to PFRS for SMEs. The intrinsic value of share options is not mentioned as an alternative. However, under full PFRS, the share option shall be measured at fair value at the date on grant. But if the fair value cannot be measured reliably, the intrinsic value is used. On the other side, under specialized activities, PFRS for SMEs and full PFRS particularly have the same principles for the recognition and measurement of biological assets and agricultural produce. This falls under agriculture section. Now, the comparison with full PFRS in the exploration and evaluation of mineral resources, it says that an entity must develop an accounting policy for recognition of an exploration and evaluation of asset according to PFRS for SMEs and full PFRS. If such happen, it shall be measured initially at cost. Now, under full PFRS, the exploration and evaluation asset, whether classified as tangible or intangible, the asset shall be measured subsequently using a cost model or revaluation model. Under PFRS for SMEs, it says that the tangible exploration and evaluation assets shall be measured subsequently using cost model or revaluation model. However, the intangible asset of the SME shall be measured subsequently using cost model only. As to financial assets under service concession, the operator shall initially measure the asset at fair value. However, the asset is subsequently measured at amortized cost according to PFRS for SMEs. Under full PFRS, the financial asset is subsequently measured at FVPL, FVOCI, and amortized cost. Last but not the least, under hyperinflation, it says that PFRS for SMEs and full PFRS are the same in all aspects of accounting. For an entity whose functional currency is the currency of a hyperinflationary economy. All in all, full PFRS is complicated, PFRS for SMEs is simplified, and PFRS for SEs is more simplified. That would be all.
Good day everyone, my name is Nolasco. Thank you for listening of our discussions. So, hope you learned more of the discussions of the full PFRS of assets, liabilities, and equities, small and medium enterprises of assets, liabilities, and equity, and also for the small entities of assets, liabilities, and equity. So, in their discussion, the treatment of PFRS and on how they are applied varies on whatever segments they are classified. For corporations, partnerships, and massive sole proprietorship, they apply the full PFRS as separate full PFRS for small and medium enterprises and small entities. Although they are different, but they all cater to give accurate value of the use of man's resources. Hope you enjoy our video presentation to you and hope you like it in discussing all the full PFRS, small and medium enterprises and small entities. And now I am signing off in this video presentation, and I will be thank you because these presentations give us more learnings in accountancy program. Thank you and see you.